Good afternoon, traders, and welcome to the Hot Stocks Outlook for September 9th, 2016. So we've had an abbreviated week this week with the Labor Day holiday, but there's still been some fantastic opportunities for traders. And like always, what I really want to do is demonstrate this approach of utilizing the technology found within the VantagePoint Intermarket Analysis software. And right now, this first week of September, we've had the S&P 500 going completely flat here, and there's been some great opportunities on the long side, but obviously very, very helpful to go ahead and hedge that portfolio, understand where there's great opportunities to go ahead and short the market as well. So that, when that volatility really comes into the market and the S&P is moving up and down 1% a day, stocks are really moving, you're already on board to make money as these trends continue and persist. So what I want to demonstrate here, there's, been some great opportunities to get into the market over the past couple months through, July and August, and we've, demonstrated those opportunities every week. But I can't stress this enough. It really comes down to the management. So identifying these opportunities and then how you manage those opportunities once you're in the position, once it's already moving. So let's look at this opportunity here in Goodyear Tire and Rubber. And very important to go ahead and explain exactly how this technology of VantagePoint works. So you see some daily bars and candles on the price data here, and we have these indicators, and I'll explain exactly how we interpret those and how those work. But before we do that, I want to demonstrate the technology here and how this works. You can really thoroughly understand these concepts here. Now, I'm going to go to this properties tab, and I'm actually opening up the properties here for this individual market, Goodyear Tire and Rubber. Now, I'm going to click on what's referred to as the intermarkets. Now, VantagePoint performs what's called intermarket analysis. It's analyzing how other markets are driving, influencing, and impacting the target market that you're trading. And to do this, it's utilizing a type of neural network. This is a type of artificial intelligence that can analyze huge amounts of data, find those significant market relationships, and actually determine to what effect each one is having on that target market that you're trading. So utilizing this technology gives traders a huge edge because they're utilizing really these predictive indicators generated via this approach. Now, the reality, guys, is for any stock, individual stock you're going to be trading, it's going to have huge influences to things like, the big macro markets, things like crude oil prices, the dollar index, the Japanese yen. You see the growth and value, the ETF markets here. But what VantagePoint's able to do, the technology is able to find a lot more of these subtle market relationships that really most traders just completely overlook and really wouldn't have the capacity and ability to perform this type of analysis. You have to utilize technology and computing power. So what we see here is these 25 to 30 most closely related markets that are known to affect, in this case, the target market here, Goodyear Tire and Rubber. And what this data is used is it's incorporated into these predictive indicators that we have against the chart. So VantagePoint users are able to utilize these indicators not only to identify trend changes and new opportunities in the market, but also understand exactly what to expect in any given market for the next few trading days. So you really understand what you should be doing, how you should be managing that position moving forward. So looking at this chart for Goodyear Tire and Rubber, you see that we have a black line there against the chart and also a blue line. And obviously, let me say again, if I haven't yet, that these are all daily bars and candles. So we're looking at each one of these candlesticks here, the green or red candlesticks, represents an actual trading day in the market. Now, those two lines that you see against the chart, very important to understand what these are. Now, the black line on the screen there, that is a regular simple moving average. You're probably very familiar with a simple moving average. It simply takes the last, however many closed prices, averages them together, divides by that number, that however many days it's been, and really plots that line moving forward. Now, that's a great indicator to tell us where the market's already been and smooth out that data a little bit. But the reality is it's always going to lag behind what the market's already done. It's going to look at past prices alone and also only look at the one market you may be trading. So just completely reactionary to what the most recent close prices were. Now, the blue line that you see on the chart, though, that is VantagePoint's proprietary predicted moving average. So before that value is plotted against the chart, It's weighing those 25 to 30 most closely related markets that are known to influence and drive an impact, in this case, Goodyear Tire and Rubber. Now, traders utilizing this approach simply need to identify when this blue line, so when this predicted moving average crosses above or below the actual moving average. And that signifies that there's been a directional trend change, and you would therefore want to look to, in this instance, be along on Goodyear Tire and Rubber back there in the early weeks of July. Now, that indicator alone, that predicted moving average, a much more effective indicator than you're going to find with traditional technical analysis. But it's really the combination of these two tools, this indicator that you see at the very bottom, that really creates the forecast for VantagePoint and allows traders to really understand exactly what to expect moving forward in the market. And it's extremely powerful for traders when you have that sort of extremely accurate information at your side here. So what our traders are really looking for are situations where you essentially get this confirmation between your crossover moving to the upside here and that neural index, which can only be a value of a 1 or a 0. Now, let me explain this so you can understand exactly how you'll want to use this tool. Now, the predicted neural index, it's a 48-hour indicator. It's really looking 2 trading days ahead. Now, our predicted moving average, that's signaling direction, right? If the market's expected to move higher or lower, whereas the neural index is signifying that short-term strength or weakness over that, again, that 48 hours, there's two candles there. So what you'll notice here is just how effective and accurate this indicator is. And now we see that the crossover to the upside matched with that 48-hour neural index forecast says the market's going to start moving higher. And so we see that traders, as long as they maintain that position, they're really still in this trade. And we actually see that going into this week, you had a gap up. You really have to be in the position if you want to take advantage of that move from 29.50 up to 31 in that gap. But you've gotten about a 16% move higher over just 42 trading days. So just over the past couple of months here, about $4.50 a share. So even just a few hundred shares here making you $1,200-$1,500 pretty quickly there. Now looking closely though at this neural index, and we'll look more so at some of these other charts here, is just look how effective the neural index is, saying short-term weakness over the next couple of trading days. But as long as that blue line, and you see a ton of separation between that blue and black line saying, look, the direction is still up. You want to maintain that long position. If anything, be trying to buy on dips because we're still in an uptrend. You see once that neural index straightens out and gets up to a 1, getting that strong boost higher in the market, you definitely want to be on board there. Neural index drops down to a 0. Little bit of weakness in the market. So, you don't want to be pushing positions. Day traders wouldn't be messing around with any sort of market like this. You know that, hey, there's some weakness coming in the market, but the uptrend still intact, still in place. So this is what allows traders to really have the patience and understand, look, expect that short-term strength or weakness, but you're going to understand directionally, is that uptrend still in place? So you can make sure you capture that 17% move to the upside, because it really is making the most out of every opportunity that makes all the difference with your P&L and your overall trading results here. So the software, very straightforward, very simple to use. But again, I stress when you have the, direction and timing down, you can really, customize and create a portfolio that's going to be hedged, very well in periods like, this last month where the S&P has gone flat and you're getting a lot more volatility in these markets here. WPX Energy here. So energy company here, we had a little boost in crude oil prices over the past couple weeks. But the software, regardless of what's going on in all these markets, works exactly the same way. So we get this crossover to the upside saying WPX directionally expected to move higher. You also see over the next 48 hours, prices are expected to move up. You see our neural index drops down for one day. You get a down day there for the next trading day. We open a little bit lower here, but look at that separation between the blue line and the black line. And so once that neural index straightens out, you get a nice move higher, aggressive move higher in the market. And, you're on board for a really nice trending move. So you can go ahead, lock in those stops, and essentially, stay in that market. As long as that blue line remains above the black line, you know exactly what you should be doing. Again, showing the effectiveness of this neural index. 48-hour forecast, right? So we get that weakness over the next 48 hours, but the uptrend's still in place. So you want to make sure that you hold on to that position, make sure that you're not taking all of your position off and maintaining that trend. But we see here that the market so far up 34% in 23 trading days. And not only that, but you really knew the trading days where you wanted to be heavier on that position and where you should expect that strength over the next 48-hour period. But 34% move. This market here trading at around $10 a share, so easily 1,000 shares, making about $3,500 in a single trade. That's really never moved against you, and you really understood exactly what was coming moving forward over the course of the trade there. AK Steel here. And again, the importance of really insulating that portfolio with some long and short positions where you can make money really with both sorts of your position, not only the initial position, but also any hedge you may take to kind of bring down the volatility there. But AK Steel here, same thing, just to the reverse. Crossover directionally saying, look, direction's expected to move lower. You see the Neural Index very, very weak over that time period, and you get that aggressive move lower. Neural Index pops up to a 1, you get a little bounce higher in the price action, but the direction obviously still to the downside, and traders would want to go ahead and maintain those shorts, maintain taking those short positions on the market. We see here this market so far down 30% in just about 23 trading days, and really the same for a lot of these steel and aluminum companies and things like that. The software really pointing to a lot of similar companies saying this is really where you want to go ahead and focus any of your attention on short positions in the market there. Last opportunity here, financials. And if we look at the ETF markets using the VantagePoint software, financials and tech through July showing really nice uptrends is a great opportunity to go ahead and get long those markets. And we see just how those opportunities have really worked moving forward. Crossover here in Fifth Street Finance and just a ton of these financial stocks doing really well. But you see that crossover, Neural Index up at a 1, a lot of strength there in the Neural Index over that course of that initial move higher. But this market's still moving higher here. And you see that so far market's up, let's see, about 27%, almost 28%, $1.36 a share. Again, 1,000 shares easily purchased here, a couple thousand shares, making you a few $1,000s on a single move. And what you also notice here, guys, is, just the trade management to help you understand what to expect based on your trade style. That Neural Index coming in real early saying, expect that weakness in the market, you get that dip, but the direction is still to the upside. So, to make sure you capture that 27%, you really have to know what to expect, be comfortable, go ahead, deal with that volatility. And if you get the crossover, sure, go ahead and get out of your trade. But as long as that blue line maintains that directional bias for you, you can feel confident going ahead and holding on to that position. So, those are the opportunities. Again, the software performing exceptionally well over the past few months where we've had these great rallies in tech and finance and a bunch of other opportunities here. But as always, thank you all guys for watching. This has been the Hot Stocks Outlook for September 9th, 2016. Again, thanks for watching, and bye for now.